Welcome back to The Wizard of Investment, where we explore the world of finance and investing. Today's episode focuses on the latest developments in the finance world. Specifically, we'll be discussing how concerns about inflation among corporate America are rapidly decreasing. The CEO of Berkshire Hathaway-owned See's Candies is finally seeing some relief on the prices that help bring the brand's storied chocolate to market. Sugar has more than doubled in price. Sugar is more expensive in the United States of America than any other place on the planet. It's a price-controlled kind of a scheme. Butter is up over 100% in the last year, explained See's Candies CEO Pat Egan. I believe that we're actually, I hope, at the peak of that. Egan isn't alone in the C-suite community in breathing a sigh of relief on inflation after a brutal two-year stretch. Of all the S&P 500 companies that reported first-quarter earnings from March 15 to May 11, new FactSet research found that 278 called out inflation on their earnings calls. While this is above the 5-year average of 211, the number is the lowest among S&P 500 companies going back to the second quarter of 2021. It also represents the third consecutive quarter in which the number of S&P 500 companies citing the term inflation has declined on a quarter-over-quarter basis. By sector, financials and industrials boast the highest number of companies citing inflation on earnings calls for the first quarter. The fewest number of inflation mentions have come from communication services and utilities. While top execs may be feeling better about the inflation outlook, mixed reads on prices of late still have Wall Street worried. April's Consumer Price Index, CPI, increased 4.9% year-over-year, the lowest level since April 2021, as prices for food cooled. The headline increase represented a steep deceleration from the 9.1% peak hit last June, but prices continued to hold above the Federal Reserve's 2% inflation goal. And super core inflation, which strips out food, energy and shelter, saw a 0.4% increase in April. That was a faster pace than the 0.3% increase in the measure in March. Meanwhile, the Producer Price Index, PPI, for April showed a year-over-year increase of 2.3%. Similar to the CPI, it was the slowest annual increase since 2021. The mixed reads have ignited concerns that the Fed could stay the course with interest rate hikes, surprising a stock market positioned for a pause. Inflation's been higher than we want it, but let's try to stabilize the prices without generating any unnecessary recession, Chicago Fed President Austin Goolsbee told Yahoo Finance's Jennifer Schonberger. See's Candies CEO Egan has been forced to raise prices on consumers during the inflationary outburst. Certainly we've raised prices. Every business has to. We have to cover our costs. And our ingredients cost, as an example, have gone up 30% year-over-year. So we have to make sure that we're covering that and labor costs, Egan said. But with inflation moderating, maybe that box of chocolate is a few dollars cheaper come the Berkshire annual meeting in May 2024. Thanks for tuning in to The Wizard of Investment. If you enjoyed this video and want to see more, don't forget to hit that like button and subscribe to our channel for regular updates on the latest investment tips and strategies. Remember, the key to successful investing is knowledge and preparation, so stay tuned and keep learning with us. Thanks for watching, and we'll see you in the next one.